Welcome back, everybody, to video number 3 in Chapter 2 in our second module. When we left off, we had just done some service revenue for cash, but now we're going to do one on account. On account means that we are doing it on credit or something like that. We are the bank for our customers. So away we go. Here, we provided some soccer training to customers on account for $2,000. So, accounts receivable is a current asset on the left-hand side. We make it get bigger by debiting it. Service revenue lives on the right-hand side of the income statement. The only thing on the right-hand side are revenue accounts. And so we are going to credit service revenue to make it get bigger. Now, when we do our closing entries and it rolls into the retained earnings in the stockholders' equity section, it will increase stockholders' equity. So now, on December 23rd, they received some cash in advance of $600. Here, we are using an account which we referred to previously, deferred revenue or unearned revenue. This is a liability. Do not confuse it with actual revenue on the income statement. This is not. We only include revenue on the income statement when it is earned. And we haven't earned this yet. So we're going to increase our cash by debiting it here. It's an asset, as you know, left-hand side. And deferred revenue or unearned revenue is on the right-hand side of the balance sheet as a liability. We're going to increase it with a credit. And in transaction 9, we paid some salaries. Here, our accounts are salaries, expense, and cash. Expenses live on the left-hand side of the income statement. To make them get bigger, we debit them, which is what we did here. And cash lives on the left-hand side of the balance sheet as a current asset. We are going to credit cash to make it go down. Now, here is the trick in this transaction. When it rolls from expense into the statement of retained earnings, it's going to reduce the statement of retained earnings and thereby reduce stockholders' equity on the right-hand side of the balance sheet. That process occurs at the end of the period when we zero out the income statement and roll that balance into retained earnings. Okay, I know that's fairly confusing when you first start out as a student. Okay. Now we're going to pay cash dividends here of $2,200. So we are going to debit the dividends account and credit cash. Dividends lives on the right-hand side of the balance sheet in the statement of retained earnings. So by increasing dividends with a debit here, we are reducing stockholders' equity. Just like an expense, except the expenses roll through the income statement and dividends lives in the statement of retained earnings. Okay, that is also a little confusing when you're first starting out. So, of course, we're going to credit cash to pay for those dividends because cash is going to go down. All right. So now, if we summarize all these journal entries, they've done it here nicely. Here's the first 4, and here are the next 8, and then we have 2 more. Now, this is a nice example of what the general ledger accounts will look like. Let's look at cash real quickly. Just you can see all our debit entries are over here on the left-hand side. All our credit entries are over here on the right-hand side. The debits are greater than the credits by $6,900. That's our ending cash balance. We do that for all of these accounts. So now, a little concept check. Which of the following is used to provide a chronological record of all the transactions affected by a firm? So let's go back. You can see that the general ledger doesn't do that. It records all the information from the journal entries, but it's the journal entries that have that chronological record. Okay. In this case, the income statement is a financial statement used to determine whether a business makes a profit or not. I just showed you the general ledger, and then the trial balance we haven't got to yet, too much anyway, but that's going to be a listing of all our accounts with their balances. In this concept check, which of the following accounts would be debited when a company pays $12,000 in advance for 1 year of rent? So if we're paying it in advance, it's unearned, right? I'm sorry, we're paying it in advance, so it's a prepaid asset. My fault. And here, it's going to be prepaid rent. Answer Charlie. One more time, probably for the 10th time you've heard today, prepaid rent is not an expense. It's an asset. We have not used up that prepayment yet. So it sits on the balance sheet till we do that. You'll see how that works in subsequent chapters. Okay, now we'll look at the trial balance. What does a trial balance look like? It's a list of all the accounts and their balances, debits and credits, showing the total debits equal the total credits. And that's its purpose, to make sure that everything's in balance. And eventually it's going to help us with our adjusting entries. But that's in Chapter 3. We'll wait for that fun for the next module. It's used almost always for internal purposes only. And it's not published to outside parties. And it's not required to follow an order of listing, but it usually does. It usually is listed in the order of the general ledger account numbers, which we will get to at a subsequent point in this course. So, we are checking to see the primary purpose of this trial balance is to show that the debits equal the credits. And there she is, the trial balance. And as you can see, it's listed with our assets first, our liabilities second, our stockholders' equity third, along with dividends, and then our revenues and expenses. And at the end, the debits must equal the credits. Anytime we do a trial balance, the debits equal the credits. Okay. Everybody good on that? Good. Okay, which of the following accounts would appear in the credit column of the trial balance? Credit column of the trial balance. Prepaid rent's an asset. Dividends has a debit entry. Common stock, that looks like a credit entry. And then salaries expense is a debit entry. So we're going to say Charlie. And that ends Chapter 2. And so bye for now. When we next come back, we will start talking about Chapter 3. Until that time, have a good rest of your week.